everyone. Welcome to your weekly update. I am your host, Larry McCain with Elite Mortgage and Team McCain, powered by Berkshire Hathaway Home Services. Welcome to another gorgeous weekend, folks. It is absolutely gorgeous. High 90s this weekend, maybe even 100 degrees. Definitely by Monday and Tuesday, the holiday weekend itself, we've got 100 plus on the menu. Summer is here. Yes, summer is here. You know, that's actually what officially happens when we kickstart Memorial Day weekend. That's the start of summer. That's when vacations begins. Folks are heading down south from from Northern California, naturally, to the beaches, to the amusement parks, heading to Hawaii, all over the place. And so, you know, we're excited in 2021, this year in particular, with COVID, folks have been locked down. And so now we get a chance to get out and enjoy and do the things that we love doing. So enjoy this beautiful holiday weekend. But one thing I do want to leave for you, I want to actually mention to you, remember, this is Memorial Day weekend. It's the weekend that we honor those who lost their lives, the brave men and women who lost their lives serving this country. So make sure you pause and reflect. Thank them. Send prayers to them. Send prayers to their families again, because their families, you know, they're here. And of course, their loved ones are not here. So we must lift them up as well. All right. So today I want to cover a couple of items naturally, talk about some current events, and then go into the real estate and also talk a little bit about interest rates and lending. So real quickly, cover with current events, I want to focus on a story that I read recently. I tend to follow, of course, those who know more than me because they lead the way. And there was a meeting this week between, of course, you know, the lawmakers in Congress and also those folks who how I like to say it, control the money, not only in this country, but have great influence in the world. So that would be folks like Jamie Dimon, the chairman CEO of Chase Bank, you know, Goldman Sachs, you know, those folks who really kind of know how things work here. And so I was reading an article recently, in fact, we'll have it put here, placed on the screen. They were talking about the housing. A lot of folks want to say there's a bubble. What you're going to read in the article is that, you know, whatever you name it, it's not like it was in 2008 and 2009. I've been repeating that week after week after week, month after month after month. You know, the underwriting is much better. The federal requirements are being followed, so it's much better. It's very stringent. I mean, I write loans, it's extremely stringent. Than it was way back then. However, I'm going to read a note here that was, let's see here, a note here from the meeting from David Solomon, the CEO of Goldman Sachs. So here it goes. Goldman Sachs CEO David Solomon said he doesn't see a bubble, though he urged the Federal Reserve to, quote unquote, get the right balance, unquote, in policy to keep booming asset prices in check. Let me read that again. He urged the Federal Reserve to, quote, get the right balance in policy to keep booming asset prices in check. Folks, let me help you out. What he's saying is they need to raise interest rates. That's exactly what he's saying. But he's not going to say it. Why? Because if he said, hey, we need to raise the interest rates, what do you think the investors, you know, folks, policyholders, you know, at Goldman Sachs would do? They'd be ticked. They move all their money out of Goldman Sachs and go somewhere else. And so naturally, he's going to speak between the lines to basically say, hey, we need to get our policy back in check. And, you know, the truth of the matter is he's right. Rates do need to go up. And the reason being is because it's having unintended consequences to other markets and to actually all of our markets. We're seeing inflationary pressures all over the place. And that's just a combination of things that are going on with low rates, stimulus, and things of that nature. But more importantly, and really the elephant in the room, we're seeing prices skyrocket through the roof. It's very easy. There's high demand for the cheap money that's out there, low interest rates, and there's very low supply of homes. Then you add in the fact of COVID, constricted even more tighter, you've got a serious imbalance that needs to get cured. I've been saying this for months. I firmly believe that this will be the last year, at least currently, unless something else, you know, some other crisis takes place, but this will probably be the last period of these great interest rates. So if you have not refinanced, this is the time. My contact information is there. Give me a call, shoot me an email, message me through some medium on social media. I will certainly get back to you and do what I can to help you out. As I mentioned, I just helped someone recently get rates under 3. And then again, thank you again for heeding the call, folks. I get lots of calls. I am truly blessed to be able to help so many different people. And so I'm helping someone right now. They were quoted a rate actually from one of the big banks, or actually was a direct lender. And it was like 3.6. And this person had great credit above 700, low debt. And, unfortunately, they have a lot of weight at the top that they have to satisfy. That's why typically going with a direct lender or going with a big bank, it's going to be more expensive. Yeah, you'll go into the banks and they have your money and all that good stuff, but you're paying them by twice actually. You're giving your deposits there, so they're holding it and making money off of that. Then you're getting these exorbitantly high loans from them as well. If you want better rates, give us a call. For us brokers, what we do naturally, if we're looking to be very lean and efficient, if we're not closing deals, naturally we're not getting paid. So it's very important for us to offer very competitive rates. Give us a call. Love to help you out. All right, let's talk a little bit about the real estate market. The market, again, folks, it's still very constricted. Kind of mentioned earlier, kind of the thing that's going on, lots of demand with low interest rates and whatnot, record low interest rates. And of course we have constriction, with supply. But again, there's 2 dates I want you guys to hold fast to. 2 dates, June 15th, June 30th. June 15th here in California, the mask mandate will end. When the mask mandate ends, folks are going to be out and about in society. It's not going to happen overnight. There are going to be folks that are going to be tiptoeing naturally into, back into the communities, back into crowds and whatnot. We're going to take our time doing it. We're fully vaccinated, so we're not concerned about that. But it's always going to be a little bit of momentum going into it. It won't be automatic. And of course, June 30th is when the federal mandate moratorium on evictions ends. That's a big one. That's a huge one, because a lot of inventory has been waiting to go on the market. But again, folks are just still in that forbearance, trying to figure things out. So that naturally needs to end so we can again start the process of a natural movement. Folks, not going to happen overnight. It's going to take some time. In fact, by midsummer, I'm going to predict we're going to see a lot more inventory on the market. And then as we get into the fall and winter, it'll be even a lot more than in previous years. Well, I should say in the previous year, because that's when we've been mostly affected. But with that, I do foresee interest rates going up as well. So we're going to have this natural balance of, ebb and flow to get things in line. I'm going to show you a chart here. Actually, I'll have it posted, so I'll speak on it here real quick. This chart, of course, prepared by the appraiser extraordinaire, Ryan Lundquist. Love the work that he does. If you're not following him at Sacramento Appraisal Blog, folks, go there now. He has a wealth of knowledge there for you. I thought I was a nerd. I love nerds because, we love data, and this guy loves data as well. So I appreciate what he has to present. Take a look here at this chart that's on the screen. Just the Sacramento region, the housing region in general. That includes, of course, Placer County, El Dorado County, from April of 20 to April of 21. 23% change, a 23% change in pricing. It's there in black and white. And so naturally, once interest rates start to correct itself, then we're going to start seeing that number flatten just a little bit, but not much, because again, we've got lots of folks coming in from outside of the area. So this is still a great time for you. If you have not had a chance to purchase a house, rates are still very good for you. Get in on it now before it's too late. Once the market moves past you, it's hard to catch up. I've seen it happen in many times, talking to clients, thinking the market was going to go back a certain way, and they are so priced out. It's just so unfortunate. I feel so bad. Thank you again for tuning in to your weekly update. I am your host, Larry McCain with Elite Mortgage and Team McCain, powered by Berkshire Hathaway Home Services. Wishing you all a wonderful holiday weekend. Get out there and enjoy the beautiful weather we're having. and we'll see you next week. Take care.